Pilla talks taxes. He has been for over 45 years, and there isn't a human on the planet with more experience solving tax problems on behalf of taxpayers. He wants to solve your problem, whether you know you have one or not. So if you do have a tax problem, call the office or visit TaxHelpOnline.com. Or if you don't have a tax problem, then your current tax problem is taxes themselves. So let's get into the policy issues of today. Doge says the IRS modernization program is $15 billion over budget and 30 years overdue. According to Corcus, the IRS processes about the same amount of data as a mid-sized bank, but it uses significantly more people and more resources to do it. The question is where's all that money going?
Well, the answer is it's gone down the rat hole, Josh. There's no question about that. And, the IRS tells us that they're using 1960s era technology, which I just simply don't buy. Now, there are some systems in the Internal Revenue Service that are outdated, no question about that. Some of their legacy systems are using old platforms. There's no question about that. The IRS has spent tens of billions of dollars business systems modernization. All you have to do is look at every single Treasury budget that has been passed in the last 35, probably the last 40 years, going back to the early 1990s. There's been a line item in that budget for what they call business systems modernization, and it's been every single year, a couple $1 billion, maybe 500 million, maybe $1 billion, maybe 1.5 million or billion rather, every single year in and out, year in and year out, to upgrade their computers. Now, I'll tell you what, and it got so bad in the middle to late 1990s when billions of dollars was allocated to the IRS over a relatively short period of time. Part of the IRS Restructuring and Reform Act of 1997 called on the IRS to modify and modernize its systems, and Congress allocated billions of dollars to do it, and all of that failed. And in 1999 into 2000, they actually brought in a commissioner of IRS, a guy named Charles Rosati, who wasn't even a IRS guy. He wasn't a tax guy. He came out of the private sector, and he was a data processing guy. And they hired this guy, Charles Rosati, specifically to fix the IRS's computer systems. Well, after a couple of years, he threw up his hands. There's a lot of problems going on, and we can talk about what those are. Again, this is 25 years ago now, Josh, we're talking about. So here we are now, 2025. Over the last 20 years, again, billions and billions of dollars of allocation for business systems modernization. And there's no question that the IRS is getting better at their technology. That's undeniable. Just for example, last tax season, the IRS processed about 162 million individual income tax returns. They processed another roughly 110 million business tax returns, and about 85% of those tax returns are filed electronically. All right. Now, obviously, they're using modern technology to facilitate this electronic filing. In addition to that, the information returns that are filed with the IRS every year, there's almost 5 billion information returns. I'm talking about W-2s and 1099s that are filed with the IRS every year, and probably 95% of those are filed electronically. So to say that the IRS is limping along on 1960s era technology and its entire systems are outdated is just simply not true. It is true that they're wasting a lot of money on business systems modernization because they don't have a comprehensive plan. All right. It's always been a series of patchwork repairs that they've been doing. And here's the other problem. And I'll tell you, this is the biggest problem. And we see this in the annual reports that the IRS releases in discussing the various elements of its operation. Every single year, Josh, there are substantial changes to the tax code. We're going to see substantial changes to the tax code again this year. And so what happens is, instead of their IT personnel focusing on making changes to their legacy systems and upgrading their legacy systems, they have to spend thousands of man hours, probably tens of thousands of man hours, updating their computer programs to deal with the tax law changes that are happening. All right. Congress continues to heap these law changes on the IRS year after year after year, and they got to reprogram their systems to manage this, to handle this. All right. And so it takes a tremendous amount of work. And over the last 5 years, we've seen massive amounts of computer changes with all of the various changes that took place with the COVID laws that were passed, starting with the CARES Act in March of 2020. This was, I forget how many pages the CARES Act was, but it was probably 2,500 pages. A lot of that stuff had to do with the tax law, and then amendments to those changes, and then amendments to the amendments, and more amendments, and new laws. And it's just one thing after another after another. And of course, we saw the Inflation Reduction Act that was passed during the Biden administration just a couple of years ago. Now here we are with the Tax Cuts and Jobs Act about to expire at the end of this year. And so Congress is stirring the pot yet again to make more tax law changes that address the expiration of the Tax Cuts and Jobs Act. Josh, this is an endless stream of tax law changes. The tax law has been changed more than 6,000 times just since 2001 alone. These changes have to be programmed into their computers. And when they're spending time dealing with those changes, they can't spend the time dealing with the upgrades that are necessary to manage their systems.
Essentially, this is another hidden compliance cost that people can't even see built into the income tax system that could be done away with a retail sales tax, is what you're saying.
Oh, yeah, there's no question about it. This kind of administration makes the system much more expensive. There's no question about that.
Every time they stir the pot, every time they change the tax laws, instead of spending the money that they have allocated to upgrading their systems, they end up having to spend that money to upgrade the bylines, just essentially the code, not even the coding of the software coding, but the tax coding. So they're wasting all that money that they're supposed to be spending on hardware and upgrades by just stirring the pot.
Yeah, there's no question about the fact that every time a new tax law is created, these computer systems have to be reprogrammed. And instead of spending time on upgrading the system in a universal sense, they have to put in all of these patchwork changes to the program just to be able to process tax returns for the next tax year.
And that's an insane prospect that they can't even upgrade their systems to do things more efficiently and save money that way, because they're just always lagging behind the actual tax laws.
Now, the IRS released when the Inflation Reduction Act was passed by Congress, and I believe it was July or August of 2022, the IRS came out with a comprehensive business plan. And their comprehensive business plan, I don't have it in front of me, I'm going off the top of my head, but there were 5 or 6 separate elements to this comprehensive business plan. What are we going to do with this new money? Remember, Congress allocated $80 billion in additional supplemental funding to the IRS over 10 years, so that worked out to $8 billion a year on top of its normal appropriation, which is roughly $12.5 billion a year. So their appropriation jumped to roughly $20 billion. Now, some of that's been clawed back, but that's what they were granted through the Inflation Reduction Act. So they produced this plan. And as I said, there are about 5 or 6 different elements of the plan. And they were talking about taxpayer assistance, and they were talking about enforcement, and they were talking about employee retention. And one of them, of course, was business systems modernization, how they were going to spend billions of dollars over that 10-year period of time, specifically focusing on business systems modernization and getting themselves into a position where they would not be dealing with this very old legacy system. But again, so many tax law changes come and go, so many ways that Congress stirs the pot. They've got to make these changes to the day-to-day operating systems versus changing their legacy system.
A few years back, there was a report that Palantir Technologies was getting involved with the IRS in order to update their systems and bring their computer systems into the modern age. Is there any news on that? Is that still happening?
Okay, well, Palantir Technologies was a independent contractor that the IRS hired to the tune of $100 million that had nothing to do with hardware upgrades necessarily. The programs that Palantir Technologies was developing for the IRS was a data mining program, all right? And so what happens is the IRS collects billions, well, probably trillions of bits of information every single filing season. Remember, I said there's roughly 5 billion information returns that are filed with the IRS every year. These are W-2s, 1099s, all of the third-party reporting that goes into the Internal Revenue Service. They have to process that data. So they've got this mountain of data there, and now what do we do with the data? So Palantir Technologies was hired to create a data mining software program that would allow the IRS to look into this mountain of data that they have and sort it in various ways. And not just the data that the IRS has available, but data that's available in the private sector as well, in the public realm, produced by the private sector, but in the in the public realm, that would allow the IRS to enhance its internal data with public data. And by that, I'm talking about Facebook posts, and I'm talking about tweets on the internet, and TikTok videos, and all these things where the IRS could actively mine that data for tax law enforcement. So this is the other aspect of what the agency is doing right now. They're using outside contractors to do that.
So that's another reason why probably a good idea to get rid of the income tax system in general, because they're spending all this money to hire Palantir to spy on us, more or less, so that they can get better data on how to tax us versus eliminating the income tax entirely, saving us all that compliance cost and raising revenue that way.
Oh yeah. There's no question about that. But what we're talking about here is not finding new ways to tax people. What they're doing is spying on the public, systematically spying on the public to find the unreported income that they believe is out there in the marketplace. You see, we've got a tax system that's based on income, right? And all of the income is responsible to be reported on your tax return. If you walk down the street tomorrow, Josh, and you find a $20 bill laying on the ground, you pick that $20 bill up, put it in your pocket. That's taxable income. You're expected to report that on your tax return and pay taxes on that, right? That's part of the base of economic activity, forms the individual income tax. The IRS for decades has been screwing itself into the ground, trying to find ways to capture this income that's out there in the marketplace, the so-called unreported income, what you might call black market income, these types of things. And this has been going on for as long as I've been paying attention, which is north of 45 years here now. They're trying their best to unearth the unreported income. And so the Palantir Technologies data mining program is all about doing exactly that. How do we find, so for example, if they find somebody on the internet that's posting videos and Facebook chats and so forth on the internet about their small mechanics business that they operate out of their garage, the IRS might look at the tax return and say, well, wait a minute, this individual is not reporting any income from a mechanics garage in his backyard on his tax return. This person has unreported income, and that might trigger an audit. So that's what they're doing with the data mining, is trying to find the so-called hidden income that's out there in the marketplace. You don't have any of that problem with a consumption tax, because everybody pays the tax at the point of purchase of the product by the end user. The tax is paid at that point in time. So it doesn't make any difference what your income. Pay the tax not when you earn the income. You pay the tax when you spend the money.
That sounds like a better system to me, but is there any hope to be implemented in Congress with the new tax law that's coming out, or what exactly is happening with the Tax Cuts and Jobs Act in Congress right now?
Okay, well, that's a good question. First of all, to answer your first question, over the next 2 years, the first 2 years of the Trump administration, we are not going to see any significant move to abolish the income tax and the Internal Revenue Service lock, stock, and barrel and go to a national retail sales tax. All right, even though Trump was talking about that a little bit peripherally on the campaign trail, and some of those remarks have been made here in the last 2 months or so, there is no systematic move in Congress to do that right now by the Trump administration. What's going on right now is they are pushing the renewal of the Tax Cuts and Jobs Act. So there is talk in the Senate right now. They're working in the House of Representatives right now to push through an extension of the Tax Cuts and Jobs Act that would also increase the SALT deduction. All right, one of the proposals that's on the table right now is to increase the SALT deduction. The SALT is state and local taxes. So the deduction you get for your state income taxes and your real estate taxes and state sales taxes, these things that are typically deductible on a tax return if you itemize. Right now, that deduction, totality of that deduction, is capped at $10,000. They're talking about increasing that deduction to $25,000 per individual. I assume that would mean $50,000 for a married filing jointly tax return. So this is what they're pushing right now, Josh, is the renewal of the Tax Cuts and Jobs Act. They're also toying with some of these other ideas that Trump threw out during the course of the campaign, which was no tax on Social Security benefits, no tax on overtime pay, and no tax on tip income. Now, are those three things going to pass? I think there's an excellent chance that the no tax on Social Security will pass. I think there's a far slimmer chance, in fact, I would argue slim and none, that the no tax on tip income will pass and the no tax on overtime pay will pass. I don't think those things have a chance, but that's just me talking. We'll see what happens as the debate starts to heat up in the Senate and the House. Right now, these ideas are on the table and they're being debated, they're being kicked around, but there is no formal bill yet that's been introduced in either the House or the Senate accomplish any of those things. So we just have to see what's going on. And I'll tell you what's happening right now is the Republican leaders in the House and the Senate are floating some of these discussions to see what has support and what doesn't. What can we get done here and what can't we get done? That's where we're at right now in the process.
Well, it seems to me like these tax adjustments, I would say, I wouldn't even call them tax cuts necessarily, but these tax code adjustments would be almost a unified good good thing for both people on the left and the right, because the SALT deduction sounds like it's going to benefit people in high tax blue states better. No tax on Social Security is going to benefit old people. No tax on tip income is going to benefit servers and service industry professionals.
Service industry people, yep.
Service industry professionals. And I can't imagine how no tax on overtime would do anything but benefit the blue collar workers. So it really seems like they've got a comprehensive group of adjustments that would unify people in favor of this change.
Well, it's funny that you mentioned that, because when the Tax Cuts and Jobs Act first took effect in January of 2018, it was passed in 2017, took effect in 2018. The Democrat leaders in the blue states went absolutely crazy that Congress capped the deduction for state and local taxes, because of course it's the blue states that have the highest state and local taxes. People in New York went crazy. Our legislature here in Minnesota, a left-leaning leftist legislature, went crazy. Same with California. You know, how dare you put a cap on our high tax? My response to that was, well, if you've got a problem with your citizens paying high taxes, why don't you just reduce the tax burden on your citizens? But of course, they wouldn't have any part of that. But they did accuse Trump of using the tax code to punish blue state voters who didn't vote for Trump in the first, we're talking about the in the first election, right? So 2016 election. But the fact of the matter is that Republicans in the blue states also have been putting pressure on Trump to increase that tax deduction for state and local taxes. And it's going to happen, no doubt about it. And it's funny that you mentioned the no tax on tip income and no tax on overtime pay as benefiting all citizens. And you'd think that would be a bilateral support for that. But when that was first proposed, particularly when we're talking about tip income here, when that was first proposed, some of the leftist commentators out there started saying, hey, that's nothing more than hidden tax cuts for the rich. And how they were calling that tax cuts for the rich, I'll never know. But that's what they were saying, until, of course, Kamala Harris got behind the idea of no tax on Social Security and no tax on tip income. Then all of a sudden it was a good idea. The Social Security thing, Josh, should be a no-brainer, no question about that, because it wasn't until 1979 that we had any taxes on Social Security to begin with. Up until that point, those benefits were never taxed, and they shouldn't be taxed, because you pay Social Security tax on your income as it was earned in the first place. You draw the benefits back from the program, they shouldn't be subject to double taxation.
There's no question in my mind that that's how it should work. Unfortunately, there's never been a whole lot of logic in the tax code in my mind.
The current tax system that we have right now is completely unsound. Never mind the logic part of it. It's completely illogical, no question about that. But it's unsound economically, it's unsound constitutionally, and it's unsound morally. All right, it's an unsound system. When you got a house that's built on an unsound foundation, you can't fix any of the problems by filling the nail holes and painting the wall. You have to bulldoze the house and start over again. And that's exactly what we got with our current tax system. The foundation is unsound. As I said, it's unsound economically, it's unsound constitutionally, it's unsound morally. It needs to be bulldozed, and we need to start over again.
Well, I certainly agree with that. And I would actually ask anyone watching right now, if you can come up with some mental gymnastics about how exactly no taxes on tips is a tax cut for the rich, please explain that to me, because I have no idea how they would even come up with that logic. But anyways, the next question is kind of a leftist question. The people on the left, whenever it comes to tax cuts, they always say, how do you pay for the tax cuts? When in reality, tax cuts aren't something you pay for spending, which is of course something that they need to cut immeasurably. But what are they going to do? How do they pay for this? What will tariffs be enough to offset lost revenue for these other tax breaks?
Well, there's no way that tariffs are going to be sufficient to offset the revenue. We've got incoming revenue to the federal government right now equal to roughly $5 trillion. About 2% of that money comes from tariffs. All right, about 65 or 70% of that money comes from the personal income tax, the corporate income tax to a far lesser extent, and then the payroll taxes, Social Security, Medicare, and Medicaid taxes that come right out of your paycheck, right? So those three sources are the biggest share of the revenue stream coming in. There's no way that tariffs are going to ever be enough to replace that revenue. So we got to cut spending remarkably. There's no question about it. Now, how do we pay for it? Well, this is the discussion. Nobody in Washington seems to, well, first of all, I completely agree with your analysis about this distorted idea of paying for tax cuts. You don't pay for tax cuts. A tax cut is nothing more than allowing a person to keep their own money that they already earn. You don't pay for that. You pay for the spending. You're exactly correct. Now, what's being bounced around in Congress right now, unfortunately, is an increase to the debt ceiling of about $4 to $4.5 trillion over the next little while here, over the next few years. So the way they're going to pay for it, they're just going to pay for the spending. That is, they're just going to borrow more money.
The reality is we're going to get taxed by inflation, because inflation is, of course, the hidden tax.
inflation is the hidden tax, no question about it.
Well, that'll be all for this week. Thanks for watching, taxpayers. And remember, there's no such thing as a hopeless tax case. And if you think yours is the exception, then call the office or visit our website to get a hold of Dan here. He can help you see the daylight. Dan, tell them where else they can follow along with your taxpayers' rights crusade.
Yeah, absolutely. Follow me at Pilla Talks Taxes. I'm primarily on TikTok, Facebook, True Social, and right here on YouTube. Make sure you subscribe, like, and share these videos, especially with your federal and state representative. And if you have a tax problem, go to my website, TaxHelpOnline.com. Buy any book on my website at any price point. You get a free 15-minute consultation directly and personally with me. TaxHelpOnline.com.